Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 24th of October. So I've seen some pretty good earnings come out this week, and we are a good way through the earnings period, and the markets are certainly starting to move around a little bit. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the US dollar CAD, and we can see that we've seen a little bit of, basically over the last 2 weeks, a decline in the trend up that we had. We had a series of high highs and high lows, which was actually working quite well. But it's pulled back now to a really good level. We've got obviously a level of support because we can see that we had resistance over here, which really makes it a very good roll reversal zone. It only needs the 2 touches to make it a roll reversal. We can see that we had resistance over here as well. And now we find ourselves at a level of support, but also probably just as importantly, we've got a 20 moving average right there to hopefully help bolster its move up. So what we want to be looking for now is effectively a series of higher highs and higher lows on a smaller time frame. And that will give us the momentum that we need to start kicking off this level. In the first instance, we'll be looking for the previous highs at around that sort of 140 to 50 area. And if we get a daily close above that level, then we're going to start looking at the bigger picture, 140, 180-ish area as the next target zone. But for now, we've still got, we're well and truly in an uptrend, even though we've seen a decline over the last couple of weeks. It's at a level now where it really needs to do something. So all we're looking for is a series of higher highs and higher lows on a smaller time frame, and that will give us enough momentum to start looking at the next move up to around that sort of 140, 50 area. Not massive moves. We're only talking about 50 or 60 pips, but they are still a very reasonable result in terms of what the market's actually doing, because there is good enough momentum in this on the up side, and it is a very, very good level of support. The 20 moving average, that's basically technical analysis 101, higher high, higher lows, pull back to a roll reversal zone, and a very key moving average in its direction. And yeah, off we go. That's what we're really looking for as traders. So hopefully that will give us the momentum that we need. If, however, it breaks through, and all of a sudden the daily's trading underneath this 139 sort of 70 zone, that's a different story at that point. And then we're going to start targeting the next roll reversal zone, which is around that sort of 139 flat-ish area, which is again another 50 or 60 points down from there. So not bad trading on the CAD. We just need to keep an eye out for the movement on the shorter time frames. All right, over to the dollar index now, and this one's played the game again this week. It's been pretty good in terms of what it's been giving us momentum-wise on the upside. Pulled back to a really good level. Moving averages obviously have caught the price action. Now that it's this week, it's been trading above the 20 moving average, and even more importantly, above all of this resistance, which is now support. You can see that we've got a lot of resistance around that zone, around that it's a sort of 98.50 area. Well and truly trading above it now. And like I say, now that it's above the moving averages and that level, we're looking for shorter term momentum to push it up to the previous highs at around that 99.50. Of course, that is a weakening euro USD, as we know, so that's probably the one that you would trade in the inverse manner. But right now, what we're looking for is a return back to those previous highs. So we want to see this momentum continue up to around this 99.50 area. And again, if we get a daily close above that level, I think there's another 100 points to get to that sort of 150 zone without a lot of trouble. We need to get a daily close above there first. So keep an eye on the smaller time frames. That's really the most important thing that you can look for in these situations, because if we see the momentum continue, so we see a series of higher highs and higher lows on a 1 hour or a 15-minute chart, that's going to give us the momentum that we need to carry us through to these levels. If it turns around and fails to actually make a new high and is trading back around these moving averages and around that sort of 98 40 area, we'd be looking at it with a very different lens. It wouldn't want to fail here, because then it's going to break down that pattern, and then all of a sudden we might have a series of lower highs and lower lows instead, and that's change of momentum and direction on a prevailing trend, which is the daily, and that changes everything. So we're going to be really careful about that. But so far so good. We've seen a good week of momentum pushing up at a level that it really needed to push up from. So good trading there. So let's now have a look at the S&P 500. The all-important earnings season is well and truly underway. We've seen a week and a half to 2 weeks of it now. And although the earnings have been mixed, nothing has really surprised the market. So I think that's why we're seeing quite a bit of stability, especially this week. Last week, we obviously saw a massive drop, but we've seen a big kickback off that, and prices well and truly trading above the moving averages now again, and that mini support zone. So Look, it's not one of those ones where I would be looking for big moves. I mean, it's almost at the all-time high again. So realistically, these sorts of trades don't really interest me all that much, especially in the middle of an earnings season. So ideally, what we're looking for is I would let it break. If it is going to go higher, let it break through and then take the trades on the flip side. So if it goes up higher, then comes back and retests it from above, that's a far better trade than trying to take the initial trade and breaking through when there's so much uncertainty, because those ones could return very, very quickly and take you out. So really, there are two ways to play it. You can either wait for it to break through and then test that zone and then take the long, or if it rolls over, and more importantly, if it's trading under the 20 moving average, look for these lows around here, around that sort of 65.50 as the initial target. A lot of this is going to be driven by obviously tweets and and earnings results. So really, yeah, it's a bit of a muchness when you're looking for short-term movements on these. You want to keep your trades relatively tight, stop losses tight, take profits tight, because the market, it can be very, very volatile at this time of year. So you don't want to get caught up in the whiplash that the market can certainly give you. And you can see it's been quite whiplashy over the last couple of weeks. Very big range candles that have got reversals every single day. Nearly the last 2 days have been a little bit more steady, but again, not really going anywhere. So be careful with this one. If you are going to trade it, if you're hell-bent on trading it, just be mindful that there is quite a bit going on in terms of earnings and obviously policy talk. So just be mindful of that. And really, there's not a lot to aim for the top in my mind, but if it does close below the 60 area and the 20 moving average, I think there's 100 points there to around the 65.50. That would be a relatively smooth transition if we see any weakness whatsoever. So if we see a series of lower highs and lower lows on a 15-minute chart or a 1-hour chart, that might give us enough momentum to get to around that level, and then we'll reassess from there. But it's certainly a day-to-day proposition on this one. You wouldn't want to be jumping in anywhere with a long-term view at this stage, I wouldn't think. All right, we'll go to gold now. And actually, gold's had a very, very interesting week. You can see we had a very, very big drop earlier in the week on the Tuesday. Then it continued on, but it did pull back quite significantly. Like it got to as low as nearly 4,000, which is a significant drop, obviously, from the highs. So that did happen very, very quickly. It pulled back, however, $100 very, very quickly. And today's candle, as we can see, we've got basically it's a doji candle, and we've got a decent range on either side. So the price action certainly gave it a crack on the low side and the high side, but it's effectively finished in the middle. So we've got an uncertain candle, which is the doji, of course, but at a level where you would hope it would, because realistically, if gold is to continue on with its powerhouse move, look, it's been an exceptional move, we know that, but if it's to continue with that power, we definitely want to be seeing support around this level. If we see a sell-off past the 4,000 without a pullback, then it's starting to look a little bit sick, and we might see quite a significant fall. But we want stability, so ideally we'll see a bit of a pullback. Now, it doesn't have to go all the way to the highs, of course, but if we see a series of higher highs and higher lows from this level, especially if it's trading above 41.50, I'd be looking for that next mini zone at around that 42.50, which is the base of these two candles here. So pretty good trading on gold if you can get that momentum, but just be mindful that it needs to stay above the 4,000 to stay as a solid uptrend. Let's have a look at oil, and look, it's been a great trade. Obviously, we were talking about it last week, finding its potential bottom at around that 57.50. It's had a really good week. It had the two long-legged dojis that we can see here at the bottom of that level. We know it's pretty strong support at that zone, so good trading from there. It's hit both targets. Actually, the first target initially of $60 was hit only a day ago, and then it's continued on to the 62.50, which is our secondary target. I know a lot of you got this, which is great because it was a pretty easy trade, really. And to join in, I mean, you only have to go into the smaller time frames. The 4 hour probably doesn't really reflect it, but it showed the kickoff. But the 1 hour and the 15-minute was where it was at. You can see the high low sequences right through, all the way up to the second target. And on the 15-minute chart, it gave you even more opportunities to get in. This was the clearest of them all, of course, as they always are, the smaller time frames. Once you get the series of higher highs and higher lows, pullbacks to the 20 moving average, very, very straightforward trading. And again, good to see a lot of people get this, because this is very, very basic technical analysis. That was at a very good support zone. So these are the trades that we're always trying to target. So well done to everybody on that. All right, so where it goes to from here, look, 62.50 was the target. If you are looking for a potential reversal, this might be the area that it is, because you know that there's support at that level there, which could form resistance now. But if it does happen to break through past the 62.50 and continue on its uptrend, I think that channel would be, the next channel would be trading, which is that 65.50, 62.50 channel again, which served us really well for a long time. If it rolls over here, I'd only be looking for a move back down to the $60. I wouldn't be looking for the lows again, because I think there's enough momentum to kick it on here. So we'll be looking for a reversal down to $60 if we see a series of lower highs and lower lows. But that at this stage is probably not the preferred trade. So we've had a great week's trading, everyone. Look, we've seen some really good moves. Volatility is still going to be around for the next few weeks, I'd imagine. So just trade carefully. Hope you have a great weekend. I look forward to seeing you all next week.